The country is also enjoying a really high GDP growth rate, which makes it the top among major emerging market economies.
Hi, I'm Sarah Forster, news editor here at The National, and thanks for joining me for this week's episode of A Closer Look. Now, sometimes throughout life you might find yourself landed with a little bit of extra cash, whether it's come in the form of inheritance, a big win, maybe you've made a big sale. You might be wondering what to do with that money. Now, we've got some very brainy people on our business team, and I've invited one of them to come and give us just a few suggestions as to what to do with the money, and that's Deepthi Nair. Hi Deepthi, thanks for coming in.
Hi Sarah, thanks for having me.
You're welcome. Now, before we get into this, I want to ask a quick question. So we're going to be dealing with the sum of money. We're going to pick the number $10,000, right? US dollars. Now, before finding out what people could do with this money in terms of investing, should they come into it, I want to know, what would you do with $10,000?
Oh wow, that's an incredible amount of money. I love traveling, so I would just book myself a trip to Antarctica. That's what I would do. Yeah.
To see the
penguins. Yes.
Right. Yeah. Okay. I think you're meant to say like a low yield bond or something. I think that's the business answer, right? But no, you'll go and see the penguins. I love it. Okay, so this is a number we're dealing with. Obviously, people might have more, they might have less, but it's just a nice round number, isn't it, to deal with, right? So 10,000 US dollars, which is around 40,000 dirhams, right?
Yeah, approximately, yes.
Okay, so a lot of the brains on the business team, are very wise when it comes to investment opportunities. And we have an article on the site, which you can check out, which offers some interesting alternatives to maybe what people might normally do. They might normally just dump it in their stock market, the S&P 500, an all-world ETF, that sort of thing. Say people want to diversify a little bit more. Mm-hmm. What are some potential options?
All right, so our article explores 3 exciting opportunities that are outside the US, typically outside the Magnificent 7 US tech stocks that people can explore. So the first opportunity is the Indian stock market, which is on a bull run right now, and it's really giving the Wall Street a run for its money. So as you might know, the MSCI India Index has been delivering double-digit returns in the past 3 out of 4 years. And also the Indian population is very young and it's growing really fast. And the country is also enjoying a really high GDP growth rate, which makes it the top among major emerging market economies. Another factor in its advantage is that the fraught US-China relations is also benefiting India. So these are all the reasons why investors should consider the Indian stock market.
So basically, India's as you said, it's in a bull run, and it doesn't look to be ending anytime soon. So a potential area for you to put your money. Anyway, so let's go on to option number 2, which sounds a bit like a breakfast cereal.
You're right. So I'm referring to this very interesting trend that's being seen in Europe, which is giving which will give investors an alternative to the Magnificent 7 US tech stocks. It's an investment acronym called Granolas.
Granolas.
Yeah, and it refers to 11 high-quality, internationally focused companies that operate across different sectors. These include the likes of Nestle, AstraZeneca, SAP.
Okay.
So they give diversification as opposed to the US Magnificent 7 stocks. And these operate in different sectors like packaged goods, healthcare, technology, luxury goods, and the likes of it. And the point to note is that these stocks have delivered a very tasty return of 72% since 2021.
How much, sorry?
72%.
72%.
Since 2021. Yes.
I think only Nvidia beats that, right?
Yeah,
that's good. That's good. Okay. All right. And then moving on to the last suggestion.
Yes. So another trend that investors can leverage is commercial property. This could refer to anything that's not residential, so the likes of warehouses, office blocks, shopping centers, hotels. And this sector could give good returns once central banks start increasing interest rates, which could be in June this year. This sector took a beating during the COVID pandemic when demand for office space was less because people were working from home. But investors could consider commercial real estate investment trusts, which can give both rental income from tenants as well as capital gains from the underlying property portfolio.
I was going to ask, how do you invest in a warehouse? So it's kind of like, it's called a REIT?
Yeah, it's called a REIT, Real Estate Investment Trust. So it's like a pool of funds that invest in an underlying asset. So now with interest rates on the rise, commercial property prices are also depressed. So this is a good time to actually enter the sector and benefit from the appreciation in the long run.
Because the entry point is what matters,
Yes,
isn't it?
Correct.
Thank you so much, Deepthi. I should, of course, point out that we are not giving financial advice. You are always encouraged to do your due diligence and consult with a financial advisor. Well, that's it for this week's episode of A Closer Look, brought to you from right here inside the National's newsroom. Don't forget, if you would like to see any of our previous episodes, you will find them on our YouTube channel.